Hi everyone and welcome to 3 Charts in 1. 3 Charts in 1 video. We're going to be looking at Euro Dollar, S&P 500 and the gold chart today. It is Non-Farm Payrolls Friday on the 1st of April. So let's get going. Right, okay, Euro Dollar, really strong rally we've had early part of this week. The news on Ukraine seemed to be improving. The positive traction seemingly in the talks allowed Euro Dollar to rally sharply on Tuesday and Wednesday. Thursday, big bearish engulfing candle. That is a reversal candlestick, and it looks like it's starting to pull back lower again because we are lower again today. So strengthening on the dollar. Strengthening dollar pulls euro dollar lower. It's interesting that it's coming around this key resistance area. So it's coming backwards now. 4-hour chart. We're starting to see a move already below the initial support at 110.70. That's happened overnight, and the market is starting to really sort of continue lower. And the question is, how far does it come lower? Because if you go out on the 4-hour chart one more level, you can see there is this run of higher lows in place. So the chances are that it's likely to be coming back potentially towards the sort of 110.20, maybe even 110 figure area to test that. And what we have is non-farm payrolls today. So a lot of volatility. If payrolls is strong, big jobs number, big earnings growth, that will be dollar positive, and that will drag euro dollar lower. So the key support 109.50, 109.40, 109.50, key support area, that needs to hold. Otherwise you're looking back down in the 109s and maybe even 108s again. Gold chart is interesting because what we had is the sharp run higher, then the return, and since then, in the last 2 to 3 weeks, we've started to see the market just basically trading in a range, and you can see that range is confirmed on the relative strength index, the RSI, just hovering between sort of 45 to 55 area. That is indicative of a range play, and we can see that basically in the chart here. We've got the support that comes in a band between 1878, 1895 on the support side, and then up towards 1966 was the reaction high. But you can see all these old highs and reaction lows, and they now become resistance. So that's the level that we need to break out on the upside to see a positive bullish move once more above 1966. Otherwise, you're basically just trading in a range. It's a little bit messy at the moment. You can see here on the 4-hour chart, nothing really doing in terms of direction that can be sustained. Moving averages all flat as well. So basically ranging at the moment. We're looking for a breakout either way, to the downside below 1890 or above 1966 for a key move. And finally on S&P futures, well, it did have a breakout above that key resistance. I'll put the crosshair there of 4,585. Key resistance that got broke out early this week, but then pretty much an instant reaction back lower. And having now moved back below the breakout level, that becomes a basis of resistance again. So how the market reacts to that resistance will be key. If it starts to now find resistance on a rebound underneath 4585, then that turns into a corrective move once again. We've already broken essentially what would have been an uptrend in this move. I'll go on the 4-hour chart. You can see this rolling over. You can see the 4-hour RSI underneath 50 now. So again, on a near-term basis, that suggests more of a corrective move starting to develop. So the resistance, as I said, 4585 area, 4560, 4570, up towards 4585. Obviously the key reaction high 4627, 4628, sorry, let me get it exact, 4630 on this chart. But certainly it looks as though this could be now starting to roll over. So you're looking at key support levels on the payrolls report, 4492 and 4445. If they get broken, that certainly does start to then turn corrective. So I wish you good luck in your trading today, and I'll speak to you next time.